Well, hello folks, LA here. This is the weekly report doing on the 22nd for the 21st. Last week, mixed market. We got up on the S&P, down on the big caps. NASDAQ NDX, also on Bitcoin. Pretty much up everywhere else. It was actually interesting. You had a huge rally here, but you didn't sell off elsewhere, which was kind of unusual. Two things stood out this week. One was mega cap technology, down on the week, other than Apple. What did that do? That finally sent the NDX back towards a decent level for a retrace. Another 1%, 1.1% away. Here's your numbers. I suspect it gets there. And when it does, I expect it's going to bounce because it'll be the first test more than 6 bars. Now, if it doesn't bounce very high, right, comes up and rolls back over, then we're going to have finally a larger correction. Or if it doesn't bounce at all and just breaks through this, right, then you've definitely got a larger correction going on finally. And if we're going to get a larger correction, what would it look like? Well, anywhere from 7, 8, 9, 10%. Here's a 9% retrace, just takes you back, breaks a couple of swing point lows, brings you back to this level here. So that would be a normal one, right? 9%. It looks pretty bearish on the daily time frame. But if you just pull the chart back and look at it on the weekly, 9% is nothing, right? This thing could go like 17 and still be bullish. So I guess the question is, do we have any evidence that the long-awaited retrace is here? And there's some things that make you say, well, I don't think so. Here's the Dow Jones, right? Just did 10 days up. As we said at the top of the show, even the S&P was up this week. But if you look a little closer, maybe so. Look at here. Is this a shooting star reversal that's trying to take place right here? That was on the NDX, and here's the NASDAQ doing the same thing, and even the S&P, which was up, did the same thing. Add to that, you had the interest rates flip back around, and they're right up here doing a full, not a full, but they did almost a full retest, regen on that bullish retest, and they're right back to the top, ready to regenerate back to the top side. Of course, higher interest rates is not really good for the market, and we got the Fed heads going to do their, bending of the spoon stuff, their tricks that they do again this week. Here's another view, right? There's this NY FANG, which is kind of an index of these equal weighted. They readjust it, keep it equal weighted. These are all the big guys. Snowflake's the only one you probably haven't seen in the big ones. It's doing a full bullish retest regen already. It's already back there. And so the mega caps are already starting to do what you would expect after this enormously long run to the upside. The second thing I saw that was really positive this week was that the breadth was really there this week. You had biotech, transports, basic materials, energy, financials, industrials, durables, utilities, healthcare. Healthcare even broke out. That was everything else other than the mega caps, right? Basically, that's what you need, right? You need to see rotational strength while the big fast ones move back. And that's what we should see right here. We've been talking about it before. Here's communications, here's technology. They're in kind of nosebleed regions already in terms of their cumulative probability of a failure. If we look at the fundamental side, last week retail sales a little bit weaker. The core PPI, CPI elsewhere, like in Canada, Europe, they were actually weaker as well. As I've said, I expect this to start to change. We had two of the heavyweights, Tesla and Netflix, and both of them got knocked down hard on the news. So far, in general, right, earnings so far have been very small gains or just outright losses, and that's a change in character, and that also is contributing to this retrace that's trying to get underway. Next week, FOMC meeting, they're going to raise it. Market expects they're going to stop. I think they're going to say otherwise. Whether the market believes it or not, that's another story. You're also going to have the ECB, the Bank of Japan, doing their thing. GDP numbers, the more important piece of that is the PCE inflation, which is what the Fed really looks at. And you got 3 more big earnings out of the mega caps next week. Bottom line here is, things look actually pretty good still. And it, if anything, after a long run, you need some sort of consolidation retrace. And so hopefully, we're right here right now, if anything, right? Hopefully we're going to get something like that. A, we get some better prices to actually buy. B, it's healthy for the market, right? Market needs to reset, set up some things, and go again, because right now there are no targets. I mean, it's just taken everything out. Even the small ones that did get created have been taken out. Short-term direction, it's going to be very dependent on the mega caps and the central bankers this week. And all evidence that I can see, right, is that we're going to get some sort of a retrace here. I expect it's going to be kind of a stair step. It's going to be, because the dip buyers are going to keep coming in, and that's going to keep it from, just plunging kind of thing, right? And there's an outside chance of that, but I doubt that's going to happen. And in all those cases, you just got to expect that whatever kind of retrace takes place, there's going to be dip buyers along the line. The retest regen here, S&P on the daily, this should get bought. High probability. That's down around 44.50. Expected to get bought if it gets there. And that's also true on the weekly. If it does get an even larger retrace, these are about 5.5 to 8% lower. Most interesting tidbit this week looks to me like something that's a little bit above my pay grade, but this basically just says, are we at max equity exposure again? There's some computations. You can go and read more about it if you want. But this was, I haven't seen anybody point it out like this, but just basically saying, hey, the household equity exposure, the percentage of total of liquid assets, is up there at its peak already. All right, moving to the trading plan here. We got a lot of 15% gain on the year. We're down, we're up as high as I think it was around 16.5 this week, but it got whittled back down. So a small drawdown from last week. I've done basically nothing, right? Just keep waiting, and that was kind of what we planned to do. 55% long and waiting. We want to buy. We want to retrace to buy it on. That's what we're waiting on still. As I've said before, if we don't get this, right, if this just doesn't give us a retrace and it just, hangs up here real tight in a small range and everything comes back to those retest regens, we're just going to have to find a way back into some more exposure as a result. Here's your weekly projections, and I'm going to go out on a limb again and say, I still think we're going to get a retrace. We started to get it last week, but we had such a strong start to the week that it ended up positive. I expect that retrace is going to take place, and I'm still banking on it. Last thought to leave you with here is, if you're going to make an error in this market, make it to the upside, right? The only errors that we've made are to the top side. Have a great one. Stay safe. I'll see you next time.